under the new Trump administration and what to expect going forward. John Micklethwaite, the editor of Bloomberg News, spoke with Ukraine President Zelensky in Davos. We're going to play a little bit of that for you, of that interview, and then we're going to break it down with Ross Matheson. She is the lead reporter for Bloomberg News in Europe, so we're going to break that all down. Some interesting comments from Mr. Zelensky. Let's kick everything off right now, though, with Mr. John Tucker and a Bloomberg Business Flash.
Yeah, knocking on the door of a record. The S&P 500 is just a couple points away, up right now, 38 points, a rise of 0.6%. Now, in the S&P 500, the best performing industry group is communication services, and that's home to anybody?
Netflix.
Yes. Very good.
Yeah.
It's at a record, fourth quarter results beating expectations, and of course, Geeta Ranganathan is going to be here in a smidge to tell you everything you know about that. And the new administration, Amanda Gotti spoke about this morning. She's from PNC Financial. She says nobody can really be sure what policy is going to be.
A lot of it's been negotiation tactics. And so until we see what the final result is, I think it's really hard for investors to position portfolios around policy.
And the parade of earnings continues. Just a couple here. United Airlines predicting first quarter profit well ahead of the Wall Street estimates. Shares right now, they've just turned lower, down about 0.5%. New Brunswick, New Jersey-based Johnson & Johnson notching higher than expected fourth quarter earnings, strong sales of its cancer medicines, but J&J also grappling with a multi-billion-dollar patent cliff approaching that. Shares right now down 3.2%. And weekly mortgage application showing little change. The rate on the 30-year loan above 7% for the second week in a row. The average loan size, by the way, $374,000. That's actually a 1 month high. And S&P 500, again, 39 points higher, 6,088 on the index. The Dow Jones Industrial Average up 136 points. The NASDAQ 100, 303 points higher. That is a rise of 1.4%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Alex.
Hi, guys. Happy Wednesday.
Happy Wednesday.
Absolutely.
You into it? Alex Steele, Paul Sweeney, and John Tucker. This is Bloomberg Intelligence Radio. Let's get you updated on some of the internal market movers of the day as well. Vincent Signorella, Bloomberg macro strategist, joining us. Now, hey, Vince, what are you watching today?
To be honest, it's all about tariffs. And, an interesting note, a trader just pointed out to me, the Mexico ETF, EWW, is fading, is basically trading a lot higher. Looks like up 1.4% without my glasses. So looks like markets really not buying into the tariff story from Trump, at least when it comes to Mexico at this point.
Is there a sense here, Vince, that it's just a timing question that eventually Trump's going to fulfill his tariff issues or threats, but maybe not immediately day one, like some were speculating, but it is coming? Or is it just, negotiating tactic?
Yeah, I think it's a little of both, but I think the first point you make, Paul, is absolutely bang on. There's basically a study period that Trump has called for with results or to be handed back to him, I believe, on April 1st. So markets basically looking at this now and going, we got a couple of months to play with. Nothing's going to happen between now and then. Let's have a little fun and see where he comes. Come pretty much the second quarter. Mm-hmm. So the first quarter, I think we're going to see a lot of volatility, a lot of chop. We're definitely going to hear some tweets and some noise from the president. He keeps me very, very busy on Squawk when he gets elected. And so I expect he's going to do the same to me this year like he did between 2016 and 2020.
All right, Vince, super appreciate it. I think he's doing that to everybody. So you have to kind of figure out how to manage those headlines. And are we overestimating, are we underestimating? Vince Signorella, Bloomberg macro strategist, joining us. Such a pleasure. Thank you very much. Let's get to Netflix at a record high. Blowout numbers. Geeta Ranganathan, Bloomberg intelligence analyst on U.S. media. We were talking yesterday, looking into it, that they really gotta deliver. They have to deliver. They can't disappoint. They have to up the ante, and they did. What stood out to you the most?
Everything, Alex. So, it was not just, we knew they were going to have a strong quarter. It was just the magnitude of outperformance, which was simply stunning. I mean, they added 41 million subscribers throughout the year. Just for some context, that's more than the total number of subscribers that some of the streaming services even have out there.
Oh,
Peacock,
boy.
for instance, has less than 40 million subscribers. So, I mean, just the scale of the business is absolutely astounding. And it's that scale which is now on display in every possible area, right? Whether it's revenue growth, whether it's, content cost growth and, cost per subscriber, which is going to be significantly less than, the revenue growth per subscriber, all of that, it was just, execution at the highest level.
So, Geetha, this kind of raises the question to me yet again. How do you think this industry is going to shake out? It just seems like there's Netflix. I'll give you Disney because it's Disney, but everybody else, is there any room left for any of these other traditional media players that are trying to get into the streaming business?
I mean, Paul, it's going to become more and more difficult. I mean, with yesterday's report and Netflix getting to that 300 million subscriber milestone, they have, I would say, very much built an insurmountable lead in streaming. There's absolutely no doubt about it. They are expecting 29% operating margins. I mean, you've always posed this question. I mean, can Netflix get to that 35% operating margin? And it looks like they're going to be able to do that very, very comfortably.
Wow.
That, leaves us to the all important question: can anybody else replicate this playbook? Maybe they can, but it's going to take a very long time. And I think by that time, Netflix is going to be far ahead of, rivals with probably, 40% operating margins, tons of free cash flow, and maybe even like 500 million subscribers.
Wow.
So, what is your question now? So, say we have to be discerning and we have to say, okay, well, it's at a record, but it's not all amazing and flowers and sunshine and stuff. What's that question?
Except it is all amazing.
You're not helping me here, Geetha.
Yeah, I mean, it is so hard to find something wrong with this report. I mean, if you were looking for, okay, is subscriber growth going to slow down? Yeah, probably it's going to slow down a little bit. But again, they've said that subscriber growth is going to be the main driver of revenue growth in 2025. Is operating income momentum slowing down? No, it's not. Are we getting double-digit revenue growth? Yes, we are. Is free cash flow there? Oh, yes, it is. So, I mean, okay, yes. I guess the big question is what are going to be 2025 is all set because you do have that subscriber momentum. You do have those price increases that are going to feed that revenue growth. So the big question then is, okay, what about 2026? What about 2027? So 2026 and 2027, I think the levers are really going to be the ad growth story. And they're putting everything in place this year so that advertising becomes a really bigger part of the revenue equation starting in 2026. And they have everything set to do that. So yes, they did raise their prices on the ad tier a little bit, just a smidge. But again, remember, it's only costing you $8 a month. That's the same as Disney Plus. So again, they have a lot more, I think, cushion to raise prices and then to also increase, their ad targeting capabilities and to really be able to charge advertisers a premium. So I think there's just so many different catalysts out there on the horizon, Alex. It's really hard to find any fault with their report here.
Because now, Paul, I feel like it's not about can you get streaming stuff for cheaper than you would on cable. It's about the content's more interesting and better. I feel like that's a different thing than when I cut the cord, say, whatever, 8 years ago.
And it's what Geetha and her research calls a virtuous circle. The more subscribers you have, the more money you can spend on content, which then gets you more subscribers, and it goes and goes and goes. So, Geetha, I think the last big area for them to conquer, from my perspective, and it goes to your point about advertising being a longer-term growth driver, is live sports. When are they going to step up and jump into the deep end of the pool and take a big NFL package, not just a couple of days on Christmas, but a season package from the NFL, from the NBA, from English Premier Soccer? There's really no area they can't go. When do you think they're going to do that?
I think that's still a couple of years out, Paul. So they obviously know that the live sports strategy is working for them. There's no doubt about it. They had the two of their biggest events, which were live sports events, and you had those record subscriber gains. So obviously, sports can be a big subscriber acquisition tool. It can also turn into a big subscriber retention tool. They do have a couple of things that they've signed up for. So, WWE is something that they already have for the next 5 years or so. But the next time a huge NFL package or an NBA package is really going to become available is probably going to be only in another 4 or 5 years' time. In the meantime, you do have, a couple of the smaller rights packages. You do have UFC, which is coming up for renewal by the end of this year. You do have, Formula One, which is something that they already have a pretty deep relationship with, kind of given their success with Drive to Survive. So again, they could go after that. They have the Women's World Cup. They already have got the rights to that. So it's going to be smaller investments, I would think, before they really go after that big splashy package.
Which is,
and by that time, their advertising would be all set. Sorry.
Which, no, I was going to say, it's interesting. I was talking to somebody yesterday, and they were like, I've never watched wrestling in my entire life, or boxing, but I did when Mike Tyson was doing it because it was on Netflix. Why not? So I also wonder if you're bringing in like a whole, you're going to want the really sexy NFL package, but do you actually need that in order to continue to grow that momentum? It's kind of amazing. So just record high after record high here. Is that what I'm looking at?
Pretty much. Definitely a very, very strong growth trajectory. Obviously, we don't have a lot of visibility now going into the subscriber numbers because that was the last time that they disclosed that. But I think we're still going to continue to see. I think what's going to be really interesting is when they start disclosing more advertising related metrics, right? That is where we need some visibility now. So whether they give us a more updated monthly active user number, the last number that they disclosed was 70 million, or whether they actually give us an actual, advertising revenue number. Those are going to become the goalposts, I think, in the near term.
All right, Geetha, thank you so much for joining us. As always, Geetha Ranganathan. She covers the media industry, the global media industry for Bloomberg Intelligence. And again, as she said, Netflix put up just an extraordinary quarter last night. And we had Robert Fishman on from MoffettNathanson, another real strong analyst on this name. He went into the year saying he predicted Netflix would add 20 million subscribers for the year. They added 20 million subscribers in the fourth quarter for a total of 40 million for the year. So he did not see it coming, and I think the street, by looking at the stock up 12% here, they didn't. The street itself did not see it coming. So very interesting there. Coming up, Wendy Schiller, professor at Brown University. We're going to get her thoughts on some of the early days coming out of the Trump administration, maybe what to look forward to from this administration going forward. That's coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. All right, so we hit a record for the S&P 500. Let's see if we can maintain this through the close. Best performing stock in the S&P 500, of course, Netflix, up over 12%. An individual record for that stock after their earnings. The earnings season does roll on. United Airlines Holdings, Travelers, Procter & Gamble, all climbing. They posted strong results. Oracle, those shares right now, they're up over 6% on a $100 billion joint venture with SoftBank and OpenAI. This is the effort unveiled with President Trump. It's aimed at speeding development of artificial intelligence in the U.S. S&P 500, 41 points higher. That's up 0.7%. 6091 on the index. The Dow Jones Industrial Average up 142 points. That's a rise of 0.3%. The tech-heavy NASDAQ Composite Index is up 1.3%, up 249 points. As Paul pointed out, the Russell 2000, the mid-caps, that is down right now 0.2%. And J.P. Morgan Chase Chief Executive Officer Jamie Dimon, interesting interview with CNBC, saying there are signs that the U.S. stock market is overheated. We check the markets with you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so very much. He also said he hugged it out with Elon Musk, which feels important.
He what?
He hugged it out. Jamie Dimon, Elon Musk apparently hugged it out. They're bros.
Hugged it out. Oh, okay.
They hugged.
All right.
Wow.
I've never heard that phrase.
You've never heard hugged it out?
Oh, that's a wow.
Oh, okay. Well, I don't know.
Not
Says
a
the man
hugger.
with the flip phone. Right.
He's not a hugger. All right, JT,
He's
thanks
not
a lot.
hugger, right?
Alex
Not
Steele,
true.
Paul Sweeney, this is Bloomberg Intelligence
I'm more
Radio.
of a handshake guy than the hug
That's
guy.
true. I totally see that from you.
I mean, that's old school, just being a gentleman, the handshake. I'm
You
not
know
in
who's
for the
not a
bro
hugger?
hug.
David Weston is not a hugger.
See where did
He's a handshaker,
Yes.
if that.
yes.
That.
I'm
hugger.
a fist bumper now.
You are
No, it's not.
not.
Yeah.
All right. They're telling us to move on from this conversation. I can't
Yeah.
imagine why. All right, let's get to Trump day 2 here. So the latest, of course, was now talking about a 10% tariff on China. President Trump saying yesterday that other countries are bigger abusers, though. It's not just China. He also mentioned the European Union and the $350 billion deficit with them. Joining us now, Wendy Schiller, a professor at Brown University. Professor, are we overestimating or underestimating what the tariff reality will be at this point?
Alex, I mean, I think this is really sort of restraint by, literally restraint by Trump in response to, I think, who you saw at the inauguration inside the Capitol. Big business, big tech, on a number of fronts, not just tariffs, but also thinking about visas for workers. He's trying to balance this so that he doesn't impose a big shock to the economy, which would raise prices for goods, while he's also deporting a lot of people who do work in the shadow economy, and labor costs are going to go up too. So having all that happen means that his promise to reduce inflation will be much harder to keep. So I think that's where he's sort of walking the line of keeping his word, but really keeping an eye on what the impact will be on inflation.
Wendy, I guess one of the issues that I think has kind of been put on the back burner just a little bit is some of these cabinet nominees, they still have to go through Senate approval. Are we going to have any real challenges laid down by the Senate for some of these nominees?
Well, Paul, I would have thought Hegseth would sail through, and, there's a pretty good margin in the Senate in terms of their margin of votes. They have 53. So unlike the House, where they can't really move without one person defecting, then it stalls everything. So these are only the purview of the Senate. But new allegations have come out about Hegseth's behavior. And it's just a question of, is that a liability Trump really wants to assume and be commander in chief? And so I think that's a little bit tenuous. I think Tulsi Gabbard's a little tenuous. And Robert F. Kennedy Jr., still, there are some questions among some Republicans. It really depends on where the Senate Republicans want to draw a line in the sand with Donald Trump. We haven't seen any of that line yet. But as sort of reverb comes back on some of the decisions he's making through executive orders, there's more pressure on the Senate to exert itself.
We saw a little bit around the pardon of January 6th individuals. There was like a touch of that in the Senate, but nothing sort of full-throated. How long do you think that's going to take for us to get a good read on?
Well, I think Republican senators are going to pick their battles. Part of that's going to be who's up for re-election, like Joni Ernst on the Hegseth nomination. She's from Iowa. She's got re-election in 2026. They're worried about being primary. Do they really think Trump will still have the mojo to get somebody really good to primary them a year from now? They're calculating their electoral future. And then the other senators are trying to figure out what's going to be the most important thing to try to block from the Trump administration when it comes to either their beliefs or their state. It's too early for them to make that move or make that call. The only ones I think who could step out are people who are not up for re-election for another 4 years because they don't really see themselves as tied to Trump electorally. So this is about electoral politics, but it's also about Senate prerogative. Rand Paul's gone out there about using the military in terms of deportations. He said no, he doesn't want to see that. So we'll have to look to the Senate because the House is just barely hanging on its majority. The Senate Republicans will be key to either moving things forward, objecting, or stalling.
Professor, what's the latest on Doge? What's the feeling in Washington, D.C. about what kind of efficacy that unit could have?
Well, Paul and Alex, this is where labeling matters. Department of Government Efficiency sounds really official, like it's a big cabinet department. But Congress has to create cabinet departments. You can't just do that whole cloth as president. So now it's really just sort of a commission/agency, which the president can create. In fact, Obama created sort of a similar thing on digital technology. So when you think about that, that makes it sort of smaller and maybe a little bit less scary. It'll be people who are embedded in all of the agencies and the departments that say, do we need this many people? Can we do this more efficiently? How can we streamline costs, expenses, and jurisdiction? Can we get the federal government to shrink not only in its size, but in its reach? And I think that's where Trump can skirt any kind of congressional stalling or objections.
Does it make a difference? Can those little tinkerings make a dent in the deficit or budget?
Well, everything adds up when you think about it, not just federal employees, which, by the way, Trump is ordering back to work. Following a lot of big industries, a lot of big companies are saying it's time to come back to work in the office. And, of course, we've seen the damage to local economies, big and small, in terms of the loss of all those people coming to and from work. So Trump is going to make the claim that getting people back into the office is better for the economy. And if that happens, if local economies pick up because of that, he'll be proven correct in that assumption.
All right, Wendy, thank you so much. As always, Wendy Schiller, professor at Brown University. Let's go to the geopolitical world. Ukraine President Volodymyr Zelensky joined Bloomberg News editor-in-chief John Micklethwait for an exclusive sit-down in Davos, Switzerland. He commented on the relationship between Donald Trump and Chinese President Xi Jinping. Let's listen in.
Phone call during the war, not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin economy after sanctions, after everything, depends very much of China.
That was Ukraine President Volodymyr Zelensky speaking with Bloomberg News editor-in-chief John Micklethwait. Want to go to Ross Matheson now, Bloomberg News director for Europe, Middle East, and Africa. Zelensky also telling Bloomberg News that peacekeeping troops in his country must include the U.S. That's quite a headline. What's the reality of that?
Well, it's a reality that he says any peacekeeping troops supplied by others, including the US, won't be nearly enough. He says he needs many, many more peacekeeping troops to really act as a proper deterrent to Russia in this case. And it's also acknowledged, even in Europe, amongst allies, it's going to be a tricky question to get commitments to a sizable number of peacekeepers. You've got governments in Europe that are fairly fragile at the moment. We've got political chaos still in a couple of countries, elections coming up in Germany, and the mood at home in these countries may not be about putting their own troops potentially directly in the line of fire, because that's what Zelensky is talking about in this interview that we had at Davos. It's not about peacekeeping troops way back behind the lines in cities. It's possibly being directly in harm's way. And so you can imagine for Donald Trump, who really is averse to troops going into conflict zones and to war as a whole, like committing to put US troops potentially in harm's way, that's going to be a very big call.
Okay, let's step back a little bit. Roz, what's the feeling within your part of the world about President Trump and his administration being able to bring about some type of ceasefire in Ukraine? Is that Are the odds higher than maybe they were several days ago? And is there a sense of timing?
That certainly seems to be the direction of travel that was happening even before Donald Trump took office. You could see that both Russia and Ukraine are positioning themselves to get in the best possible space to negotiate. It's clear that, after years of war here, that it's grinding on. Russia is still making advances, and the mood, not just outside Ukraine, but increasingly inside Ukraine is, do we move towards some kind of negotiated solution? And you can see in the comments from Zelensky in the interview, he's really acknowledging that. And so Donald Trump is going to give that a big push, that's for sure. And maybe he's the one who can really push Vladimir Putin to the table. But it's definitely the direction of travel either way.
How do you think the next few weeks play out in relation to the chess pieces on the board here?
An interesting thing is whether there is a phone call between Vladimir Putin and Donald Trump. Is that a preliminary step? They have a phone call. Trump has said he is willing to meet Putin in person. That would be a really big meeting, obviously, thinking about just location where they could do that for a start. And what are the stakes having a face-to-face meeting? But we're looking for that conversation to happen. And then how does that conversation lead us towards the idea of maybe a formal meeting between the two? And then at some point, do we get towards a full sit down? And Ukraine obviously saying it needs to be very much part of any of those negotiations. It cannot be that, that Trump and Putin do a deal on the sidelines. And very much that's been a vein of the comments in the interview we had today.
So, Ross, what is this broadly defined? Your sources over there in Europe, how are they viewing what's kind of transpired in the last few days here with President Trump being sworn in, and maybe some of the announcements coming out of the White House about various topics? What's the feeling in Europe generally?
We can see that it's interesting, the conversations at Davos, because they're very, very upbeat on the US, be it CEOs or others, and they're talking about the opportunities in the US economy and the US market, and very downbeat in turn on Europe. But for leaders in EMEA, it's concern about, are we going to see a trade war? Are we going to see this really descend into high-level trade friction, protectionism? What does that look like? Is there a fight between the US and Europe over regulation, including of big tech, for example? So a lot of worry about how does this play out in practicality. It's very clear Donald Trump is fast out of the gate on a lot of things, and he wants to get a lot of stuff done, and he wants to do it fast.
All right, Roz, thanks a lot. Really appreciate it. Roz Matheson, Bloomberg News Director for Europe, Middle East, and Africa. Someone we talked to yesterday on the show was like, if you have something that Donald Trump wants, like, now's the time to show it. A lot of that's in the ground. I don't quite know what Europe brings to that part of the table.
No, and it's kind of, we just look at Europe economically, a lot of challenges there, a lot of headwinds, even with its leading economies, and most notably Germany and France. I mean, talk to people about the European economy, and you're saying, hey, it's the Spains of the world, the Italys of the world, the Portugals that are doing well, but the stalwarts, the things that the countries you really need to lead, not so much.
No, definitely not. Just take a look at Germany. All right, coming up, we'll talk to Anurag Rana, Bloomberg Intelligence Technology Analyst, on this SoftBank, OpenAI, Oracle AI pact unveiled by President Trump yesterday. I don't quite understand it. I don't understand how you put money together that fast, but we'll break it down. This is Bloomberg Intelligence. Happy Wednesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Netflix, Oracle, other tech stocks lifting the indexes. Netflix, of course, helping lead the way after said live events helped it add nearly 19 million subscribers. That was just the last quarter. Procter & Gamble rising 3.4%. The company behind Charmin, Crest, Pampers reported stronger profit and revenue for the latest quarter than expected. And Oracle, that is jumping close to 7%, adding to its 7.2% rise the day before. This is all from that Stargate initiative. Meantime, Torsten Slok at Apollo Management says, you know what, the Fed may not be able to achieve its inflation target with some of the new Trump administration policies.
Both tariffs and restrictions on immigration will probably have some lift to inflation. And the problem for the Fed and for the economy and for markets is that inflation is already around 3%. We're just not quite yet at 2%.
Right now, the S&P 500, 41 points higher. That's up 0.7%. 6,091. So that's good enough for a record, at least on an intraday basis. Dow Jones Industrial Average up 113 points. The NASDAQ 100, that is up 318 points. That's up 1.5%. The small caps, medium cap, Russell 2000, that's down right now, 0.3%. Not a lot of movement in the yield space. Oh, the largest U.S. grid in the United States, PJM, and they say electricity consumption, which this is the grid that stretches from Washington to Illinois. The consumption reached 145 gigawatts. That tops the winter record that was set back in 2015. Also, the power prices at their benchmark hub rose as high as $742.91 a megawatt hour this morning. So I guess my bill is going to be a lot.
That's a lot.
It's a lot of money.
That's why you want to buy
my
power
natural gas
forward.
bill from New Jersey Natural Gas, that was close to $700 the last period.
Whoa.
Oh my gosh. Really?
Yeah.
Wow.
But my kids like it like 80 degrees in my house.
Yeah, no, that's not true. They like it like 70, and that's like, what do you mean? You're not wearing 18 sweaters in the house? I see through you, John Tucker. All right, Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Let's get to Oracle here, because that stock is up 7% in 2 days. You look at that gap higher overnight. It's quite significant. Anurag Rana, Bloomberg Intelligence Technology Analyst, joins us now. And this is all on that SoftBank, OpenAI, Oracle AI pact that was unveiled yesterday after the market closed, saying that the joint venture is going to deploy $100 billion, quote, immediately, and have a goal of increasing to at least $500 billion in AI projects. What does that mean? Like, what does immediately mean? Like, are they putting a shovel in the ground and putting a pipe in to build a data center?
Yeah, I think that's exactly where we are. We know the funding is going to come, and there's a lot of funding coming into AI data centers. Now it has the blessing of the U.S. government. It's going to be funded by private equity or private investors. Oracle's going to be the biggest cloud provider here, and OpenAI models are going to run on it or train on it. So it's a good thing for all three of them, obviously, but it's also good for AI advancements. The interesting part is Oracle is not even the top three cloud providers that's out there. It's led by Amazon Web Services and then Microsoft and then Google. So them getting a piece of this pie is a very big deal for them, because it's a very small business for them right now compared to what AWS generates in revenue. And I think this is the reason why the stock's up.
So how about the other big cloud players? What are they thinking? Not being involved?
I think if you see when the rumor first came out that this is happening, you saw that Microsoft started to trickle down a little bit, because right now Microsoft is the exclusive partner for OpenAI. Microsoft has outsourced some work to Oracle because they can't take care of the whole capacity. Then after the announcements was made, OpenAI and Microsoft issued a joint press release saying that they're renegotiating their own contracts in between, and currently their joint venture or partnership will be extended into till 2030. Now there are two parts of why OpenAI uses Microsoft Cloud. One is to train their models. Now that's the expensive, that's really where a lot of the CapEx is going. In that area, Microsoft will give allow other cloud providers, but they have the right of first refusals, which means they will figure out whether they are okay with Oracle doing it or not. It seems to me that they're okay with Oracle because they have already outsourced some work to Oracle. I don't know if it's going to happen or if they're going to share that with AWS. We'll see that. But the biggest piece of it, the revenue sharing, is if you use OpenAI technology to develop an enterprise application, what we call as inferencing revenue from APIs, Microsoft still controls that. That's going to run on Microsoft Cloud. So Microsoft also got the best of it, which is the reason why Microsoft is up 3% also in this game today.
So here's my really dumb question. What are some hurdles here, aka power and permits?
Yeah, but that's where the government is saying they will help you out or help these companies out in taking care of it. That is
what
definitely.
What does that entail? That means like speeding up a permit process or like allowing coal plants to run? Like what does that really entail?
I think coal plants must be tough because, frankly speaking, it is very difficult for a cloud provider not to use renewable energy. I think there's going to be a lot more talk about nuclear, for example. What we heard with Microsoft going through, they will build they may build their own smaller, you could say, capacity to run some of these things. They have the money to fund it, obviously. So if it's 100 billion spending, we think maybe 20-25% of that goes towards more tech-oriented stuff, whether it's chip, whether it's servers, whether it's pipeline, connecting networking devices or cloud computing, and the rest of that is probably going to go to more the building of the data center and the cooling units, all that stuff that goes with it.
So, Anurag, when I think of the electric vehicle business, I think of a business that China is actually leading the way. They are ahead of the US and European automakers. For AI, which is arguably a much bigger business opportunity and a longer term one perhaps, where is the US in terms of a leadership position? It feels like we're putting the resources behind it.
Well, we have NVIDIA chips, so that really makes a very big difference at this point. One of the things we don't know about China is what are they doing on the AI side in the government? That's not publicly available anywhere. So it's a difficult guess for somebody, but one thing is for sure. If you have a lot of private money coming in, and we have the capacity, I mean, as I said, Microsoft itself this year is going to spend $80 billion in CapEx. We think it's going to be closer to 85. So if you look at all these large companies with a trillion plus or $2-3 trillion market cap, they can raise funds and get a lot more AI investments. And now the government is getting involved in it. So I would say in all directions, it seems that US will not let this one slip, and it's going to make sure that we remain the dominant force out there.
Well, then, speaking of, in terms of say Microsoft and their capex maybe hitting 85 billion, was this money that everyone was already planning to spend? It was just now packaged in a nice little wrapper to everybody?
Not from Microsoft point of view, because Microsoft is not part of this spending ecosystem. So Microsoft is going to spend this, but now good part is going to be Microsoft may not have to spend this much going forward, because as I said, the biggest bulk of that spending was going towards helping some of these large language model providers train their models on it. Now, if that's done with external money, the likes of private equity or SoftBank, then Microsoft is not going to take that margin hit, or investors are not going to ask them, you're spending $80 billion, where is the corresponding 80 billion revenue in it? So I think it really helps Microsoft also down the road.
And it's a comeback a little bit for SoftBank's Masa-san here. He's back on the big stage.
Yeah, it's been miss and hits for him for some time. But one thing is for sure, the addressable market of everything AI related is going to be so large. They specifically mention a lot of healthcare initiative. If you remember, when you look at Larry Ellison's acquisition of Cerner, he's spending a lot of his personal time trying to fix that healthcare system, which, to be very honest, is probably the biggest burden on US GDP right now because of the high amount of healthcare spending we do as a country.
Great stuff, Anurag. Super appreciate it. Thank you so much. Anurag Rana, Bloomberg Intelligence Technology Analyst. You know what I need? I need a huge graphic.
Yep.
With like lines that go to what company does what.
Right.
And then how they overlap and how they don't. I think the world needs that, actually.
All right, let's use ChatGPT and search for it.
Okay.
We could do that.
You do that.
Okay, I'll do that.
You do that, and let me know
break.
how that goes. Because coming up, Salesforce CEO Mark Benioff will be speaking with Bloomberg's Brad Stone over in Davos. We have a great, we'll bring that to you live. It's going to be great. We're looking forward to that as we look forward to an S&P at a record high, 6,091, spot 42, up by about 0.7%. But we're really also led by the outperformance of tech, with the NASDAQ up over 1%. This is Bloomberg.
You're listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. Let's head over to Davos. Salesforce CEO Mark Benioff speaks with Bloomberg's Brad Stone.
And Mustafa were not getting along well on panels that they were on here at Davos. You can go back and see that. I remember one specific panel that I was in, and it was thought they were going to come to blows, but it didn't happen.
And so has Larry Ellison and Oracle, you think, stepped in as a technology partner or a source of funding for OpenAI?
I can't speak to those specifics, but what I can tell you is that I think it's a big moment in the history of OpenAI that they're not running on a Microsoft data center.
And how does it impact, I guess, Microsoft's competitiveness on AI going forward? We'll talk about Copilot and the like, but do you feel like, because of these developments, Satya and Microsoft are in an unfavorable strategic position?
Well, I think, as you know, Microsoft doesn't have today their own frontier model. So they rely on OpenAI, and now OpenAI is saying that they're going to another data center structure. So it's a big moment.
Right. And to just close the loop on Stargate, part of this is obviously driven by national security concerns and the idea that, that it is vitally important for the U.S. to maintain this lead. I mean, do you share the concern and the urgency? And do you think China is close to AI parity?
Well, you have, 6 questions in there, Brad? Let's kind of peel it apart one by one. I think that we're just seeing a incredible amount of investment in AI overall, which is because it's really exciting. Look at what's happening here at the conference I just showed you. You know that Salesforce has run the information management for the World Economic Forum for more than a decade. So everything that's happening here is running on Salesforce, and we've used our Einstein platform here for years, but this is the year that we're using Agentforce. So now you have an agent that's front-end in your app.
We should probably define what that is.
Okay, well, what it is you have the ability now to use an agent, a kind of almost like a digital worker, to help you to kind of get your job done. So here I am, I have my app, I'm on my phone, I'm normally just bringing up my World Economic Forum app, I'm going through trying to find all my sessions, when is Brad speaking, how do I know Brad, can I contact Brad? Instead, now I can just say to the agent, hey, when is Brad speaking, and will you contact him for me and help me make this happen? At Salesforce, we just deployed our Agentforce technology on help.salesforce.com, which is how we deliver help to our customers. 36,000 customers a week come to help.salesforce.com. If you had come there a month or so ago, about 10,000 of those customers have to move off and get support from human beings.
And about 26,000 got resolved by our software. Now with Agentforce, only 5,000 are going off to human beings. So our 9,000 support agents have a little bit less to do
because the software is able to resolve a lot of this on its own. And that's a very exciting moment that AI and agents can kind of give us this incredible productivity that we couldn't have, whether we're trying to navigate the World Economic Forum in Davos or where Mark Benioff is trying to answer his customers' support issues. Agents are making a huge difference in our ability to be successful.
I want to come back to that, but I just want to make sure we answered the previous question on kind of AI parity between China and the U.S.
I don't think there is AI parity today. Okay. No, I think that the U.S. has a definitive lead, and I think most of the analysis, and I think obviously you have a big shootout going on at the very top end of the frontier models between Google, OpenAI, and Anthropic. Salesforce is obviously an investor in Anthropic. We obviously have relationships with OpenAI and also Google. The Google technology, I think, is amazing. Neil Ferguson just wrote a tremendous analysis of the 3 models and kind of said it appears that Google
So Gemini is a player now.
I think Gemini is more than a player. It's probably ahead.
Okay, and by the way, Dario preceded you on stage earlier this afternoon.
He has an outstanding model and is doing a great job in his company.
Okay, so back to Agentforce. You said less things for your employees to do with Agentforce, but does that also mean fewer employees? What are the ramifications of this kind of new age of agentic models going to unsupervised, do our tasks for us?
No question. I mean, of course, in the history, look, technology is always getting lower cost and easier to use. There's not any, horses out on the streets right now going up, and now we have cars now. And in the same way, I think we should just think about the analogy I just gave you, which is that we have a lot less work for our support agents to do because we've deployed Agentforce at Salesforce. So I can redeploy that resource into other parts of the company. That's very exciting for me. I have plenty to do, so I can kind of say, okay, these folks can work on this now instead of being over here.
Has it changed the arc of your hiring plans going forward? And what does the widespread deployment of this technology mean for, a full employment labor market?
Well, that is really the powerful thing. We're in a labor market where it's really hard to hire people. There aren't people to hire. I want to radically expand sales and service and marketing at Salesforce because we are seeing a huge amount of demand in moving and deploying our new technologies. Finding those people incredibly difficult. That I have agents at my disposal is tremendous. So look, I want an unlimited workforce. I think everybody does. Agentforce, AI agents, that's beginning of
an unlimited workforce. I'll give you an example. We have a customer called Wiley. They're a bookseller in the U.S. You probably have picked up some of their books when you were in college.
We know them well, yes.
You know them well. And, you know, they have this moment every year called back to school, and they have to normally hire a lot of gig workers to go into sales or into service or whatever it is. This is the year they did not have to do it. They were one of our launch customers on Agentforce. They had the ability to just scale their sales and service when they needed it and then bring it back down when that demand spike ended. And we have now, you know, lots of examples of that. So we've now released the code late October. We did about 200 deals in our third quarter. In our fourth quarter, we'll see thousands of Agentforce deals, and I've never seen anything go as fast at Salesforce as this. I've never been as excited about the technology industry as I am right now.
So in the tech industry, we love a good old-fashioned feud. We used to have a lot of them, like Larry and Bill sparring. You know, Kendrick Lamar and Drake had nothing on the tech industry. But recently, you know, you've been tweeting or posting on X as you describe Agentforce and drawing juxtapositions with Microsoft and Copilot. Not to do more Microsoft bashing here, but I think you compared it to Clippy.
Ahead,
yeah, no, but I want you to, because I don't know that I really fully got my brain around it, how the Agentforce model is different than the Copilot model.
I can make it very simple.
Yeah, what are the two?
Well, first of all, you're right. Microsoft has disappointed, you know, a lot of customers with Copilot, and the reason why is
I'm not sure everybody agrees, but okay.
Well,
go ahead.
I mean, you can read the Gartner analysis, you can read a lot of the media, but I'm sure you're a big Copilot user yourself. Is that right?
I try to moderate my use.
Oh, I
a
see.
Bit.
So you don't use
I don't
it.
want
All right, but you're like most people. You don't
my
use
writing
it.
For me.
All right, thank you. Thank you for making my case. But anyway, the point of it is all Copilot is repackaged ChatGPT. So in a chart I just saw of like the 20 most used apps currently on the internet, like OpenAI was very much at the top. Copilot was not on the list. I just retweeted it actually. So when you look at that, why that is because why use it? It's not really offering me any value. So Agentforce is really what AI was meant to be, the ability to give a company, a user, a customer, really the value of artificial intelligence. That's why I was excited to bring it to the show, excited that Davos has deployed it, and we can really show customers here that this is a really great opportunity. And an example, yesterday we were in a session with Royal Bank of Canada, who just deployed it for their wealth management. Look, their ability to scale and compete against the big U.S. banks when their wealth management is augmented because they're using Agentforce. That's very exciting for them. Their CEO, Dave McKay, is here. It was really a great moment to hear, you know, what they're doing with this.
So before you mentioned the abundant capital flowing into AI, you know, Anthropic, even today, there was news of another $1 billion from Google. Is there any case to be made that AI is over-invested at this point?
No, there's not. I would say that we are really at a point where everything is changing. I think the evidence, like we just did a demo with your associate in the back here, where I just took out my phone and we were demoing the World Economic Forum app. And if we were here a year ago, we'd be looking at a very similar app, kind of going through what sessions are we going through, who's coming to the conference, I need to contact this person, all the typical things.
And instead, I have this agent that I just can go right to and say, hey, do all this for me. That level of productivity, that's why in the third quarter of last year, we saw productivity rise in the U.S. without any additional workers. That really hasn't happened in a while.
You think
it's very
there
exciting.
was an AI margin there?
That I think that is exactly what is going on. I think AI is kind of kicking in. Right now, I'm writing the business plan for my next fiscal year, which starts February 1. And this will be the third year in a row that I'm working with an AI to write my business plan for the year. So I have a colleague. We will write different parts of the plan. And then I will talk to the AI and I will say, hey, what do you think of this? How does this compete?
Presumably
Will this help me?
Einstein, your own LLM, and not
we have some great technology. And then I'll say, hey, how does this affect this competitor? How does it affect that competitor? And I have been shocked at how it's impacted me, that it has made me more productive, but also expands my own consciousness on what I should be doing and leading and moving forward.
Yeah,
So AI is definitely a part in how I run my
am paid
company.
to be a little bit more skeptical, and when
You are? I didn't know that. How long have I known you for? And I never knew this
It's been
about
a while,
you. So
but
I'm
when
so happy to know this about you.
when I hear things like Larry, your former boss, Larry Ellison, saying today that there